Good afternoon. Happy Thursday. Hans and Mark will be here in just a few minutes for the third and final day of the Great Income Reset. I am here just a few minutes early to warm up the audience and deliver a special surprise, which I'm going to show you in approximately 3 minutes. Get excited. How's everyone doing today? It's Thursday. We just ended, let's see, big day yesterday in the market. We had Jerome Powell's last Fed meeting. Crazy. End of an era, really. I was talking with someone yesterday. I don't think I realized that it had been 8 years. He's been in there since 2018. Crazy. We had a great earnings event yesterday at 4:15. If you didn't join us, we covered 4 of the largest tech companies reporting earnings, which were a little all across the board. I know that we talked about it a little more this morning on State of the Market, but it's been an exciting week. How's everyone doing? Checking in the chat. Goodbye to Powell and the Pittsburgh Penguins. Hilarious. Yes, as some of you may or may not know, this is my favorite time of the year, the NHL playoffs. Sadly, and it's sad but good, the Avs have not played in several days because we won 4 games in a row, but I have been watching hockey every night until way too late. I don't know if anyone else is in that boat, but I've had more than 3 coffees today. Rusty, hello. Rhonda, nice to see you. Mark, Texas. Drop your name in the chat. Let me know where you're coming in from. I am in Baltimore, Maryland. It's a beautiful sunny day here. I've got the news on over my shoulder. If you see some things populating, I like to listen to it while I work during the day. Reed, I don't know if you watched that Mammoth Kings game. That series has been really great. I did not make it up. That was really late for me to watch all that. I've just been watching the replays and the recaps the next day. There have been some really great games this year, man. It's been awesome. Hi, Clarence. I love that you love the Stanley Cup playoffs. Me too. Hey, Rhonda. Hey, Shane. Shane, I love Montana. I don't think I knew that that's where you live. Montana's awesome. I've been up a couple times to Big Sky to go skiing, which, I like some of the more rural parts of Montana more. I don't know about where you live, but Montana's a great state. I'm biased because I'm from Colorado and it's kind of similar in some ways. North Carolina, I love it. Central Washington, Minnesota, go wild. Jim Bob, if you guys win another game, I'm gonna be coming for you. You better take that go wild language somewhere else. Just kidding. Vicky, nice to see you as always. Rockville, Maryland, I love it. Welcome. I have a surprise for you guys. I'm going to show you in 60 seconds. And then I'm going to give you a little recap on what the first 2 days of the income reset have covered, in case some of you are here and missed the other 2 days. How many of you guys have been to all 3 days? Put a 3 in the chat if this is your 3rd day in a row being here for the income reset. I've been here every day, so I'm going to send a 3. Send a 3 if you've been here for all 3 days. I love it. If you guys haven't noticed, we started hosting more events like this here at Option Pit. And it's because there's important things developing in the market, big opportunities that we can take advantage of, and we want to tell you guys what those are. So that's why we started doing more of these free events. I hope you guys like them. They've been really fun for us to put together, and I think we're giving a lot of information that's really valuable. So, okay, before I go any further, there are 168 of you here. I'm going to do something that I'm not supposed to do, but I'm going to do it anyway. And it is a thank you for those of you who are early birds who show up to these events. So, Christian, if you can share my screen really quick. At the end of today, there is going to be a pitch. Hans has an amazing strategy, Turbo Income, he's going to talk to you guys about. Now, I'm going to give you guys a special discount code just for being here early, okay? Do not, this is the one condition. This special code is for you because you're here early. So later, don't send this code in the chat. This is just for you guys because you showed up early. I'm giving you a perk. It's going to be 10% off the offer later. No one else is going to get this, just you because you're here early, okay? The code that you need to use is income. So if you join Turbo Income today, at the end of today's session, there's a field on the order form that asks for a code. If you put this code on the order form, you'll get an additional 10% off. Shh, this is between you and me, okay? Don't send it in the chat. Write it down on a sticky note if you need it. Put it in front of you. Use this at the end. If you're going to join Turbo Income, it'll give you an extra 10% off, okay? Thumbs up. This is between you and me. You're here early. Thanks for showing up early. We like to give you some perks. You guys are awesome. Get a little extra off today's subscription when you take the step forward with Hans, all right? Just between us. Now, moving on. Christian, we'll have to edit that out because I don't want anyone to see that but the people who were just here, all right? So we'll have to edit that out. Let's talk about what the last 3 days have covered. I saw a lot of 3s in the chat. So I know a lot of you guys have been here for the last 2 days, but just as a quick summary, there are many ways traditionally that people have tried to generate income or that people have used as investment strategies. We've talked about bonds, we've talked about dividends, and we've talked a little bit about gold. The takeaway you need to have is that none of those work either the way they used to, And there are other ways to generate more upside for yourself. And that's what today is all about. So that's what we're going to talk about today. When Mark and Hans come in just a few minutes, that's what they're going to break down, is like bonds, they can't be the full picture. Dividends can't be the full picture. Gold can't be the full picture. So what the heck does the full picture look like? What should you be doing? And what you're going to see today, the template that Hans has put together, is something, first and foremost, he built for himself. He built for himself because in the same way that bonds, dividends, gold, and even a financial advisor aren't generating the returns you want to see, they're not generating the returns that Hans wanted to see either. So he went and built strategies. There's really 3 that he's going to talk about today that he uses together to accomplish things that bonds, dividends, and gold can't. So let me just give you an overview if you missed some of the last few days. In the 70s and 80s, bonds used to be negatively correlated with the stock market. So people would use bonds as, if the market went down and I lost money on my stocks, I could make money on my bonds. For a bunch of reasons we've covered, they don't really move like that anymore. Bonds can actually move with the stock market. So you can't park some money in bonds and hope that it's going to protect you when there's drawdowns in the market. It just doesn't work like that anymore. Gold is similar. A lot of people out there, you'll hear them called gold bugs. They love gold. They talk about gold. It's a hedge for inflation. I mean, it's true. In the last year, gold has been a good performer. I think in the last year, gold is up 38%, but that's not a normal year for gold. A normal year for gold is about 10%. And a lot of times gold's actually flat or down on the year. So if you want gold to be a part of your strategy, it can be, but it shouldn't be the whole thing. And what Hans is going to show you today is a way more comprehensive solution. Dividend stocks are the same. The biggest reason why dividend stocks can't be the full picture for you now are that the best performing stocks are too expensive to own. A lot of times the market will do things like stock splits to try to make great stocks more affordable. You guys saw this last year. They did this with NVIDIA. I think it's happened on Apple once or twice. They'll do that to try to make the market's best stocks more affordable. But when stocks are too expensive to own, you can't own them to collect the dividend. You see kind of the math there. Also, high yield dividend stocks, they aren't showing enough growth, and the higher growth tech stocks don't have a high enough dividend yield. So for a multitude of reasons, this can't be your full picture solution. Now, what Hans is going to show you today is what the full picture solution should be. He's going to talk a little bit about his strategies, Turbo Income. Jerry says Hans at Turbo is the bomb. If you trade that with Hans, let me know in the chat about your experience. It is a really exciting strategy. And the reason why I like this strategy so much is when we talk about some of our other trading strategies, big money flow, 0DTE options, trading around earnings, those are exciting because the opportunity is exciting. But to me, what's exciting about Turbo Income is everyone needs this. Like, throw an emoji in the chat, throw a thumbs up in the chat if you want to retire someday. I do. Throw an emoji in the chat if you want to feel safe and secure about that retirement and know that you are approaching it in a way that you feel good about. I do. I mean, financial security and future financial security is something that should be at the top of everyone's list. So the reason why I say that is sometimes I think when we host these events, people come and they're like, oh, well, I don't really need to trade 0DTE options, or, oh, I don't really need to trade around earnings. That might be true, but you do need to think about your financial future when it comes to investing. You have to. It should be at the top of your list of things that you care about. And it really does apply to everyone. That's why I think it's so exciting. And that's why I love talking about this and bringing events like this to you guys. And even Chuck, if you're already retired, totally get it. I mean, you still want to feel comfortable inside of that retirement, and you still want to, feel like you have some money coming down the pipeline and you're entertained and interested in learning something new and mastering something new. So there's a lot of reasons why this is really important. I'm very excited for you guys to see what Mark and Hans are going to talk about today. So For those of you who have just joined us, hello. I'm warming up the crowd just before Mark and Hans join us for the final day of the Great Income Reset. You might be wondering why we call it a reset. It's because the financial landscape has changed a bunch. Things that used to work well, dividends, bonds, gold, they don't give you the same juice they used to. So you have to find a different way to find that upside. And that's what Hans has found and what he's going to show you today. Yeah, Stephen, I think that's really relatable. Stephen just said, already retired and fixed income hurts. I have to supplement my income, and this is how I intend to do it. If you can relate to that, let Stephen know in the chat. Stephen, first of all, I'm so glad that you're here. We really want to help you do that. There are so many people, I think, that are in that boat. And you want to feel like you have a little more wiggle room, and it's fun, and you want to make money and have a nice community. So that's what we try to bring to you guys. Couple more minutes. Day 3, we're about to get started. We were talking a little bit about the NHL earlier. I don't know if any of you guys are hockey fans, but I am a huge hockey fan. I've been staying up way too late watching hockey every night. But it's a fun time to be alive. For me, between the NHL and what's going on in the market, and there's a lot going on every day. It's awesome. Please say hello in the chat. Introduce yourself if you are new. I really like what you guys are saying about some of your goals here with long-term investing and like why you do it. You know, if you talk to people who are life coaches or people who try to change their habits or develop new good habits, the most important thing you can designate for yourself is not how you're going to change that habit or what you're going to do about it. It's why. If you can't answer why you're doing something, it just doesn't have a point. And you're just not, you're not going to commit to it unless you have a why. So I like sharing some of these whys in the chat. Stephen, thanks for sharing, man. Like, Mike, reality is a pay raise is not going to help your bottom line either. Maybe not. One of the things I like about using trading and using investing is it puts you in control. Hard work pays off over time. True. Very true. Think about what your why is. It's important. Is it retiring? Is it extra money? Is it having some extra income to not stress about going out to dinner, to go visit your kids, go visit your grandkids, take your spouse on a great trip? It doesn't really matter what your why is. It's just you want to have one. WA, you know me. Welcome, everyone. Glad to see you here. A couple more minutes before Mark and Hans will join us. We did have a present today for people who showed up early. So if you don't normally come early to these, come early. Not 3 hours early, but 10 minutes, 15 minutes. One of us is usually here a little bit early, and sometimes we give away some goodies. So when we do these live things, show up a little bit early. You might walk away with a little freebie. I won't say it now, but for next time. Leave a legacy for my children. Yeah, Jose. Grandchildren, I love it. Welcome in. It is 1:02. We'll do about 2 more minutes. Let you guys trickle in. Please let me know where you're coming in from and what your goals are for investing, why you're here with the money that you want to make, not using dividends, not using bonds, not using exclusively gold. What you want to use, the money that Hans is going to talk to you about today, how he's making it via his investing strategies. What do you want to use for it? Great grandkids. Jerry, you're so young though. WA, trading is fun. Ron DMC, retired, fortunate I have business income in addition to reinvestments. Yeah, trading since 1970. I love it. So you don't need me to tell you these stories about how dividends and bonds and gold have changed. You've lived it. You've lived it. That's why we're running the Great Income Reset right now. That's why we're running the Great Income Reset right now. The ways that people have traditionally used to generate income don't work the same way they used to. So you got to do something else. They say if it ain't broke, don't fix it. Well, it's broke. So we got to fix it. We got to fix it. need a Lamborghini, shoot for the stars. I'm not here to judge what anybody wants here. Set a goal for yourself, set your why, make it happen. We're here to be the vehicle to help you do that. Yeah, Black Monday. You could have some conversations around DMC with Andrew about that. Extra income to travel, totally. All right, Mark and Hans, I don't know if you guys are here, but I would love for you to join me. We've got a nice room of 200 people ready to hear what you guys got cooking up.
Hannah, I wanted to show you something. You were talking about the NHL and hockey. When I was in Philadelphia with my kids,
Yeah.
I had Valentino and I went and saw Independence Hall and the Liberty Bell, and then Lauren and Mark went to Mitchell and Ness, and she walked away with one of these for me. It's a Chelios jersey.
Boo.
Love this guy. You know the rule about jerseys, right?
What?
You're not allowed to wear the jersey of someone that is younger than you.
Is that the rule?
That is the rule. They have to be.
I'm gonna age out of some jerseys here. That's
yeah.
tough.
I mean, it's basically I can't wear a jersey of somebody that is not retired. So my jerseys consist of a Andre Dawson jersey for the Cubs, and then I've got the Chris Chelios, and then I've got a Mike Ditka jersey that I wear.
That's awesome. I love it. Well, I don't want to dig too much into your time, but there's a great audience here for you guys that are really excited, Hans, to hear what you're going to talk about today. Some people have been sharing in the chat kind of their reason for doing this. We should talk about this more here at OptionBit. It's really important. Like, if you're going to do some of this work and show up to these events and learn something about how to generate more income for yourself or invest in your future, it's important to pinpoint why you're doing that. What the point is, what are you going to do with the extra money that you want to generate? Why do you do this? So I won't belabor it, but there's a great group. They're really excited to hear about this. So I'll head out and let you guys get started and stay tuned. Thank you guys for warming up a little bit early. Again, we do gifts if you come early. So I'd show up 10 to 15 minutes early for the next event, but I'll let you guys take it away. Good luck. And I got my notes ready to go. So awesome. See you guys.
Yeah, Hannah brought up a really good point. We all have different reasons for wanting income. And this is the most, I think, as we get older, right? I'm not, I still feel like I'm in my 30s, but I'm closer to 50 than I am 40 now. And it's something I think about. Like, I want to, now I love doing this. But at a certain point, I'd like to be able to trade with you guys and maybe not be the CEO of this company anymore and let maybe Hannah run the show or somebody else and move into a less active part of my life. But in order to do that, part of that is I've got to create an income stream for myself, and I have to build my wealth. And so what Hans is going through or what he's teaching us and talking to us about, it applies not only to those of you that are already retired or nearing retirement, but definitely to people in my age bracket. I'm like young Gen X. Now there are people that are in their early 40s that are millennials that probably haven't been thinking about this stuff that need to. And with the changes in the job market, right? None of us, the only reason why I've been able to work for OptionPit for 16 years is because I started it. And prior to that, I had jumped in my 15-year trading career. Prior to that, I jumped about 4 different jobs, all trading. But that is the landscape that our kids are in, and our kids' kids. I mean, I don't even know. Like Hans and I were talking about on day one. Like, we both have kids that are in their teens, and we're very uncertain. So my ability to build my own wealth and help my children is a major motivation, on top of the fact that, as I get closer to 60, Lauren and I have a lifestyle that we want, and I'm going to need to provide for, and she's going to need to provide for. And that's really what this entire 3-day session has been about. So with that in mind, Hans, let's dig in and start talking about the Great Income Reset. For those of you that don't know me, my name is Mark Sebastian. I am the founder and CEO of Option Pit. I am joined by Hans Albrecht. Hans has been here for 2 years when I saw a big need to add in the income portion of some of our audiences, of your guys' needs. You wanted an income slice in your investment portfolio from us. And Hans was the perfect guy to do it because he had run the income portfolio for Horizon, which is a giant mutual fund and investment management service in Canada. And so when I got the opportunity to work with Hans, I jumped at it. And he's the perfect person to guide us through this thing. Hans is now our head of income trading here at Option Pit, and he's going to talk to us more about the Great Income Reset. Our day 3 agenda today is going to be how Hans' income strategy 2x'd the 60/40 portfolio. His proprietary tool for trade confirmation, that's going to be a really fun thing for you guys to see. I've always thought I love following along with his trade confirmation tool, his proprietary tool. We're going to talk about that in a bit, but it's powerful. And then he's got a bonus income trade for all of you just for being here. Now, before I begin, I have to give the disclaimer. What you're about to see is for information and education purposes only. It is not meant as an investment advice, legal advice, or tax advice of any kind. It's for education. So if you see something and you take advantage of it, you do so at your own risk. So before we get into Hans' strategy, let's put it to the test. How did it perform versus 3 traditional strategies this past year? April 2025 until now. You have Trader 1, the gold bug. You have Trader 2, the passive income. He's in SCHD, Schwab's dividend ETF. You have Trader 3, the 60/40 portfolio. And then Trader 4, which could be you, and is already several people in this room that are using Hans's approach to income strategy. So let's put this to the test. Hans, talk to me about the gold bug and how they've done and how they've been doing.
Hey, everybody. Thanks, Mark. So yeah, the gold bug. Okay, so we see that 2014, 2015, and for those of you who were in markets back then, it was quietish, right? It was a stimulus era, and volatility was low. Inflation was low, was slow, basically. You can think of it as the dollar was strong. And so this is kind of your typical year where, you don't have anything that's really kind of bothering markets a whole lot. And you can see the performance here from gold.
So this is how gold performs, give or take 90% of the time. Is that what you would say, Hans?
90% of the time, and the gold bugs are screaming, oh, the sky is falling, and it usually doesn't fall because you really need something kind of extreme for gold to react in the way that it very rarely, but sometimes does react.
But Hans,
here you go.
So here's kind of how gold has performed through the years, going all the way back to the year 2000.
Yeah, negative 8% in that period that we talked about. But if you really look at it over the years, gold performs at about 10% a year. So we've had these incredible runs at times, and then really paint dry kind of stuff at other times. So not horrible, but about 10 to 11% a year, of performance from gold.
Yeah, over the last 25 years, 11.3%. Not terrible, but not the explosion that we've seen this year. 38%. This is the best year gold has had in 25 years. So, this year is the outlier. All right. Now, before we look at Trader 2, let's define exactly what we're looking at. We're talking about Schwab's dividend ETF. It's a typical benchmark for div stocks. And let's take a look at what's inside. So Hans, what am I looking at here?
So these are your kind of typical dividend stocks. You've got a little bit of semiconductor in there. That's kind of nice to see. But they tend to be kind of your real world sort of things. The Chevrons, the Coca-Colas, the Conoco, right? Like gas, oil, stuff that we need every day. Sugar water, Pepsi, that kind of stuff. Coke and Pepsi in there.
You can see you've got your dividend kings in there, right?
Yeah, exactly. Your typical dividend kings, your Home Depots. Some of these things are sort of cyclical. Some of them are, some ebb and flow with the economy. Something like a Procter and Gamble wouldn't. That would be more of your sort of basic needs, staples type thing. So if you look at their performance, we can see that we get, decent performance from this kind of so-called passive income. The dotted blue line is going to be your total return with the dividends, right? So your return on the equity with the dividends thrown back in there. And so you can see it's okay, but the dividend isn't anything to write home about.
Yeah, I'm with the dividends 27%, but what really kind of blows me away is, I'm looking at this chart and it doesn't feel like the dividends move the needle at all. This is more just the performance of those stocks.
Yeah, which can, in a world of disruption, as I always talk about, can really, the core holding there is really going to be prone to moving around a lot with the prevailing kind of market sentiment out there. So you're right, Mark. That's a very good point. The dividend part of it is very, very small.
All right, now here's Trader 3, the 99%. This is our 60-40 blended portfolio.
There you go. So you can see the 60-40, very, very popular. I'm sure most of the viewers have heard of this kind of portfolio, 60% stocks, 40% bonds. Some people do 70-30, different kinds of versions of this. And you can see that, and we talked about those last couple of days, very importantly, that they're really kind of very correlated now, right? They're moving together. Both are spiking together and both are selling off together. And that bond piece of the equation here really isn't giving you that sort of warm, supportive cushion that it did for many, many decades until fairly recently.
Yeah, I mean, you did 23% using this approach in the last year. And what kind of blows me away, Hans, is, stop me if I'm wrong, but looking at this and then looking at the performance of the dividend, it's basically the stocks shielded you from bonds bad performance, and bonds not really giving the protection that you were looking for.
So the stocks were bailing out bonds, basically, is what you're saying. There you go. Yeah, so absolutely. And so, which strategy is best here, right? So Mark, how do we sum this up basically?
Yeah. Well, your gold bug strategy is going to average 11% over 25 years. Not terrible, but that's not gonna give people the income return that they're looking for. And we talked about how gold volatility is increasing dramatically, and gold maybe needs to go more into the 60 part of the 60-40 portfolio and out of that safe haven. When you've seen a move of 38%, now I know gold bugs are going to scream here, but my feeling is the next year is certainly not going to be as good as the previous 12 months and might even be red. Looking at the next one, the passive income, you did 27%. That was the best of the three. And mostly because it held stocks. The 60-40 portfolio, 23%. And again, as Hans and I just said, it feels like it's basically just owning stocks and then bonds hurt you. And then, Hans, there's your strategy. The strategy that could be you and already is many people here. Folks, if you're a member of Hans's Turbo Income, let people know and talk a little bit about how great it is, because Hans did 48% in the last 12 months, more than double the 60-40 portfolio. That people would dream about getting that kind of return on something that doesn't have crazy volatility.
Well, this is it. This is a new approach, Mark, right? So sometimes, I know for those of you who follow Option Pit closely, hopefully it's all of you, and you should be, we have something called special situations at times, right? Special situations for unique kinds of situations. And I kind of like to think of this, I just thought of this today. It sounds a bit cheesy, but this isn't a special situation. This is everybody's situation, right? Income is everybody's situation. And that's why I put together this strategy over time, over decades of having done this, of having run income funds, of having been a market maker and traded both income side, long leverage side, and understanding the differences between the two, and playing within that sandbox for so long and through many, many kinds of markets. And I see people struggling out there. And it's not for a lack of content, right? Are you guys suffering from a lack of content? Are there any videos on YouTube these days? A couple, probably.
Just a
couple of videos, right? There are millions and millions of them. Everyone's got a strategy. Everyone's got an idea. But the challenge isn't finding information. It's putting it all together, right? I get that from students. They sort of say, well, I need to put it together in a way that makes sense, and from somebody with experience and a pedigree and all that. So it's the right tools that we put together to create this kind of repeatable strategy that actually works in the real world, not in a textbook. You're going to get a lot of regurgitated textbook stuff out there. And so this is the solution. So I'm really happy that people are here. And I just wanted to interject in there and really kind of set the stage for what we're going to be talking about.
Yeah. So
there's a better way.
Yeah, I think you kind of would sum that up as that it's excitement in the boring because of your ability to create income and create returns over the course of the last year. So let's look at how you build your portfolio and how you build your trades.
So here we go.
Of it is income trades. Talk to me about
20% income trades. Yeah. So you guys are going to see that this is a multi-pronged approach, because in this new different world with different rules, you need to approach things in a different way. And it can't always be the same thing, right? So in this post-great income reset world that we're in right now, it's got to be a number of things. So number one is going to be that income trade, right? That sort of foundational layer. You can kind of think of that as sort of that basic sort of scaffolding that provides that foundational layer of this always available income, right? There's income to be made in pretty much every kind of environment.
I mean, the foundation is most people don't realize is the most important part of the house. Without the foundation, the house just sinks. And that is that 20%.
And it's nice to know. It's nice to know that you have that confidence that there is this foundation that you can always look to. Now, 20% is going to be your leaps trade. So, and Mark, you've talked about this before, and Andrew has too. So this is for your longer term growth, right? So think of leaps as that kind of, it sounds different, right? It's leap. What is that? Well, it's basically a long-term option, and it's going to provide a capital efficient stock replacement. So think of it as something that allows you want to buy Amazon? Well, here's a way for you to get very, very similar exposure to Amazon for about 60 to 75% off what you'd normally pay for Amazon. And that's really the beauty when you do these correctly and you pick the right ones. That's the beauty of the leap.
And Hans, I'll outright say I stole this from you. It was not something I was doing. You came along 2 years. I took a look at how you were performing using leaps instead of buying stocks. And I said, that is an approach for me. and I've been using your Leap strategy for the last 18 months, and I've seen my retirement account really grow using this approach. And now the last piece of your income portfolio, you call a turbo trade.
Right. So after my leaps to love, as I call it, 60% is going to be your turbo trade. Now, this is going to vary in some environments, right? We have the ability to change the mix here, but this is the trade that really gives you that explosive upside in a way that leaps don't quite do, right? The leap's going to be a very strong conviction that, listen, AI is huge, right? You've probably heard me say that before. AI is huge. It's here to stay. We've got some very durable secular themes, very important things happening. You're going to really allocate to things that you believe in over a little bit more time. Turbo trades, though, are the things that are going to be a little bit more tactical, a little bit more strategic. And we did a whole bunch of those last year that were phenomenal. And that's going to give you that explosive upside. They're beautiful because they put time on your side. And I always like to throw my tagline in. It gives you time to be right, and it gives you time to be a little bit wrong before you're right. And that's a very powerful thing to have in investing, trading, the world of options in particular. So, and we've got a tool that tells you when the time is right. And it couldn't be any more simple with your yellow, green, red, basically that traffic light that tells you when is the time correct to position in these trades. And it isn't always when you think it is. I've seen markets where, it looks fantastic and I'm still getting a yellow. And that means, hold your horses. You want a tool that helps you with one of the hardest things out there, which is that patience. And that's what the MTI does.
Yeah. And we're going to be talking about the MTI in a second. And so, Hans, you've kind of replaced the 60/40 portfolio with income trading, leap trading, and turbo trades. Now, one of the reasons why people use a financial advisor is because they think it's worth it to them to pay a financial advisor 1% to 2%, and then they don't have to do any work. This looks like some work to me. Is this hard?
Well, that's the thing, right? It sort of looks it looks complicated, but it's not, right? It's not hard. And the important part of it is I'm going to make this easy for you, right? You're going to have to do a little something. I'm not going to lie to you. There's a little, you're not just going to park your money in this. You're going to have to sort of, take a look. You're going to hear from me where those opportunities are. You're going to figure out how to do this. There's a little bit of education here. There's a little bit of time to commit every week. And I'm going to teach you as we do this, right? We want to commit to something because in the end, you're going to have something that sets you apart from the 99.9% of people out there who don't know this stuff, right? So, and because it has that little bit of a hurdle, right? When you have something that has a hurdle, well, people want to kick their feet up and watch Netflix instead. This is going to give you something fantastic in the end, and I'm going to help you every step of the way.
Yeah, and I think the easy argument is 2 hours a week worth doubling the 60/40 portfolio, because that's about what the time commitment is in my opinion. And the answer is yes. That doubling of that portfolio and spending it a couple hours a week totally is completely worth it. And so that's why we're saying this could be you. And as I've said, this is people here already. I want to briefly just show you some of the comments that people have made in Turbo Income talking about the trades that you've put on. Very nice Kami exit, got out at 1402. Clarence said sold at 15. Jerry buying NBIS for $1.50 and a 79% gain in a week. Turbo Income has been the most reliable moneymaker. I just added another year. That was from Enzo. Human says Turbo Income is great. Turbo Income is fabulous and one of the best education experiences ever. When you listen to Hans, you will understand that the track record over last year is not a one-off. And this is maybe my favorite one, Hans. Comprehensive knowledge of macro and trading. I've been here for years, and he is by far the most valuable addition to Option Pit we have had. Wow.
Thank you.
There you have it.
Thank you. That is, it's humbling. It's wonderful to see. I love a happy customer and somebody who's really starting to tackle the things that we've talked. Look, some people have gotten in earlier, but it's not too late. This world is going to continue to change. And if you want to learn to get better results than long gold and, you know, long bonds, and maybe grab a few dividend stocks that pay you almost nothing, you need a better way. And here you are. Congratulations for being here today. So let's keep going, Mark.
Yes, let's take a look at how this annual 48 annual growth breakdown. And we'll start with the income trades.
There we go.
And then,
so, boom.
Yeah. And then we add the leaps. Those returned 100% this year. 49% average winner, 26 wins, 26 trades.
And you know what, Mark? Sometimes people sort of, you know, maybe we won't do a trade for 3 or 4 days. And people wonder, because I hate to lose money. I hate it.
Yeah.
And I want to wait for that absolute best opportunity. I want to wait for the MTI to give me that signal, because that gives me more confidence. And I always have a story behind it. I've had members say, Hans, you always have a story behind everything you're doing. I don't just buy, you know, I don't put a trade on because I like the look of the ticker. I want there to be a story, and I want there to be some conviction, because that translates into confidence. And that's what you guys are going to learn over time. You're going to learn that this is going to give you more confidence. And when you have more confidence, you're going to feel better about your future and about your approach to improving that future.
Yeah. I mean, what I see here is consistency. And again, and you know, 75% win rate with an average of 11% on income, 100% win rate on leaps with a 49% average win. And your turbo trades, you won 76% of the time with a 28% average win. That is a recipe to build wealth. And the consistency, the pure consistency of 3 parts of your approach winning over 70% of the time is why I loved your income strategies when I first met you, brought you on board 2 years ago, and why you're here.
And you can see here, Mark, the average cost, $1,300, $964, $860. So very doable, because we're going to get somebody to ask, hey, can I do this with $5,000, $10,000? Absolutely. Absolutely.
That's correct. All right. So now, you hinted at this earlier, the market temperature indicator. And, you know, you talked about it briefly. Let's dig in here on and kind of share a little bit of the secret sauce that you use, which is your market temperature indicator. So why don't you talk to us about this?
Well, this has been, in the works for decades. I've been working on this, been tweaking it, and it really actually isn't that complicated. I mean, there's always sort of the, this idea that, oh, it's got to be really complex. No, it's you don't need the 800 or 900 indicators that you're going to get in Thinkorswim or whatever program you're looking, or whatever platform you use. But it combines some of these important things that I found are very, very effective together to give me this idea of sentiment, of momentum, of conviction, of what the big money is starting to do. And it really is that critical information that I get. And what it also does for me is, because I'm human after all, and humans are usually using this thing, is that we all have our deficiencies as humans, right? We never have enough patience. We never stay in a good trade for long enough, and that's really the way you move the needle. It's not by making $2, losing $2, making $2, losing $2. It's by, staying in those great trades and squeezing the most you can out of those trades. So it really does give you all these things, and importantly, of course, tells you when to dive in and when to get out. So we can see here.
Yeah, and Hans, you bring up a really good point. How many of you feel like you need help knowing when to buy, and maybe more importantly, when it's time to take your profits? How many of that is, if not your biggest, one of your top 3 real issues that you have as an investor and a trader? Type in a 1 if that falls in your top 3. And type in a 2 if that's not an issue for you. And Hans, everybody here is typing in a 1. And that is why I love the beauty and simplicity of MTI, because it's as simple as red, yellow, and green. So talk to me. So explain what these colors are and how you use them.
Well, this is it, right? So this is, I'm just going to bring up, I've got Google on here. It's green. Well, guess what? Google's doing well. And I had somebody ask me this morning, we've got a nice position on it, doing fantastically well. Turbo Trade was trading about $15 lower. And I said, no, looks good. Super green. I want to stay in this trade. I want to look, we've gone to all the work of finding good trades, of finding good stories. Why do we want to take ourselves out of ones that are playing out the way? It's it, Mark. It is when we are up money. It's like we have the chain starts jangling around in our pocket. We want to cash that check, right? We want to grab that money, and you really want to be able to stay in there. So we've got basic. It's really a basic approach, right? That red is sell, be careful, buy puts, play downside income type trades, right? We can do income in all kinds of environments. Yellow is going to be wait. Sometimes we want to sit on our hands. That's sometimes when that option premium gets a little bit better, but it's very much income type environment. When it's stable, when I'm getting those overall stability signals. And then green is going to be a little bit more turbo. It can certainly just be income for those of us who really, really want to focus on those income trades purely. But green is when you're going to start to get aggressive. I sometimes call it that strategic aggression, that strategic greed that kicks in.
All right. So red, sell. If you own it, sell it. And you might even think about flipping and buying puts. Yellow, we're not opening anything new in terms of a turbo trade or a leaps trade, but that may be a great environment to sell for your income strategies. And green is when you are saying, I want to have upside exposure to this stock. Is that sum it up? Is that a good summary of how you use these lights?
Absolutely. And sometimes you get a little bit of a breakout. People are starting to get excited, but it's still yellow. And it's saying, and it's amazing how many times you'll get a retracement back as all the sort of early people kind of get shaken out, and you get those beautiful sort of patterns. You come back down to a breakout, it starts to turn green, and that is one of the strongest signals out there. So it can hold you back at times. And I find that there is an incredible sort of peace that comes with having a good tool, right? And you may use a couple other tools, but when I have a great tool, I get this sort of sense of peace. I don't feel that FOMO as much. I don't feel the noise that we all experience from markets, because I'm starting to rely on a tool that says, it's okay, Hans. It's okay. This is what we're seeing. And that's very valuable.
That is very valuable. And when you get 4 to 5 greens in a row, that is when you'll now execute your turbo trades that are that stock portion of your 20-20-60 approach. That's it.
And then it can work for you on the way out as well. It keeps you in there, and it tells you when the momentum is starting to turn. And that's when you know, and you could put a trailing stop on it. You can do all kinds of fun things you can do that make sure you lock in those beautiful gains. So as we look on here, we can see we have this stock here in the next chart, I think, Mark, where that we'll reveal in a moment. And this is kind of the perfect picture. You can sort of see this period early on where the market's struggling, right? So a word that you're going to hear from me a lot is going to be stability, right? I'm a believer in stability in order to do income trades. I don't mind instability to the upside when things are kind of exploding, and I want to be taking advantage of that. But when things are looking a little hairy, I want to stay out of it, right? And I think that's important. We've seen in periods, the tariff tantrum, and we've had too many of those periods over the past year and a half or so, 2 years, if you go back to the August yen carry trade. And so there are times where you want to wait around. You can see the MTI nice and red. We start to get some yellows or yellowy oranges. And then eventually, and those are beautiful income periods, right? You're grabbing that income. You're doing those income trades, and then eventually we can see what happens here. We start
Yeah,
to
I mean, look at this. It's showing yellow and the stock doesn't do anything. You could run income for, weeks on this thing. And then here we get we get 5 yellow greens in a row.
Yeah. There you go. I mean, don't force it, right? That's what the MTI sometimes tells you. It says, don't force it, right? Just let it happen. When, let the market do what the market's doing. But when the market says it wants to get moving, when it's starting to get serious, it tells you. And that's when you want to pay attention.
So what stock is this, Hans?
What? Waste Management? This company stinks, but the stock is fantastic, right? It is in that world of we're always going to have waste. I'm pretty sure even the robots are going to be using stuff up at some point. And so Waste Management, great stock. We gave this one out yesterday to folks. It's already up today, and we've got a few more examples, I think.
Yeah. So let's take a walk through some more examples, and let's first look at a typical income trade. And this is in Microsoft.
There you go. Here's Microsoft. We get this switch from red to yellow. Red's fantastic. I actually like seeing red because I just go, you know what? I've got better things to do. And one of the things, I mean, we can go on and on about the MTI, but one of the great things about it is most of us have a limited amount of capital, right? Unless you're Elon Musk, you probably have only so much you can deploy. Do I want to waste my capital in a trade that's not doing anything, that's just kind of sitting around? Well, you don't, right? You want to allocate, you want to deploy to where it makes more sense. And that's one of the great things is that we don't talk about that enough, right? That sort of ability to kind of go, you know what, this is a waste of time. I do not want to waste any time on this. So we can see here, we go from red to yellow. I want an income trade. This is an income type environment. So this trade gives you a bit of income, right? That would normally get you a few shares, but with options, I can kind of control one contract's 100 shares. And here we go. We can see we get this sort of income-y type environment. And then eventually we get this beautiful, beautiful green. We get those 3, 4. I like 3 minimum, 4 minimum, 3, 4 in a row. And that's when you know that the environment has changed. And everybody has this recency bias. They kind of think, oh yeah, this is the stock's been doing nothing for 8 months. We can think of many stocks like that. And it starts to get cooking again. And they'll be talking about it on CNBC 3 weeks from now. But right away, you start to get those signs from the MTI that this is something that is worth attention.
All right. So your income trade, you get out here and you make 25%.
25%. So we did great. It was less risky. And those are the kinds of foundational wins that we really want to stack up, right? That's the income part of our 3-pronged scenario that we talked about. Now let's move on to leaps here.
Yes. So this is NVIDIA Corp. This is NVIDIA Corp.
This is NVIDIA. We know it's a mover, right? So I'm all in on AI. I love it. I'm into AI. And so NVIDIA, one of the great stocks in the AI age, solid green. We pick up that long-term call, $595 is what it cost me, right? So
which would have bought you 2 shares, which would have bought you 2 shares of stock. But instead you're controlling 100 shares with a single option.
2 measly shares, but for the same money. Here we go. And look at the run we get here that gives you that big return, 9%, of course, from NVIDIA itself. But on the option, what do we get? 149%. So this is the beauty of leaps, guys. We have this very capital efficient way to approach a viewpoint that we have. The MTI helps to give us the viewpoint. The leap helps us. It's actually the leaps, right? People say it's the leap, but the leaps gives us the ability to express that view in a very capital efficient way that can have us do much, much better in the end. And that's a very, very powerful part of the strategy that you can have in your portfolio, for your portfolio.
And I noticed your exit here aligns with some yellow down here. Let's take a look at what happened after you exited.
Yeah, so then it kind of goes cold, right? And so there's always that temptation. Oh, I've gotten out and I want to get back in. Sometimes you just got to let it mellow. You got to let it take its time, work off that big run that it's had. And as we know from NVIDIA, there were many greens over the last 4 or 5 years, or even 15, 20 years. And you wait for that next one. And in the meantime, you don't have to waste your time. You go through your checklist, you look for things. Of course, we're going to tell you about something later on that's going to be phenomenal, that's going to help you find these things very, very quickly. But that's it. Let the MTI tell you the state of the environment.
So ETN, you're selling the June 18th, 310-300 put spread. You're getting a credit of $3.20. And then you're buying the 380-400 call spread for $5.
There you go.
This is a turbo trade?
This is a turbo trade, folks. So this is the kind of turbo trade. There's a few different ways to do turbo trades. This is one on ETN, which has been one of those names that I've liked, along with PWR and GEV, stocks that have basically doubled this year. Boring old generator electrical stocks, right? They've been some of the most exciting things this year, which we've been on at Option Pit for like 7-8 months now. So we've got two parts to this kind of trade, that low risk income trade, and then that sort of upside leverage piece of the equation, right? So we're using one thing to pay for something else. And if it sort of sits around a little bit, it's what we call, if we want to get into the sort of geeky parlance of option traders, is sort of, it's balanced from a Greek perspective. So you don't have to worry about that theta decay. You've got something that really gives you that ability to wait and wait a little bit longer, although you do want that turbo. And it usually means that it's off to the races. So that's the good news.
Yeah. So you're betting ETN won't go below 310, and you sell for a credit and you get paid.
That's it. And you're funding that turbo leg, right? So that's when I go, you know what, Mark, I want to be strategically greedy right now. I don't want to be recklessly greedy. There's a big difference, right? We're all pretty good at being recklessly greedy and getting caught in the noise and the FOMO. You want to be strategically greedy and have a tool that tells you when to be greedy, because it senses what's going on, it reads what's going on, and then that's when you put on that turbo trade, and that downside is going to fund that upside for that explosive upside potential where you own the leverage to the upside.
Yeah, so you're gonna kind of paying for upside by selling that stability level, that income trade, and you end up with upside for really inexpensive or free or a credit. Sometimes you can get paid for that upside sometimes.
Yeah, I love it. And you get paid for the income, you get paid for the upside. It's really a beautiful trade. And Mark, you know this as a former market maker as well. I mean, this is something that oftentimes it's structurally positive, right? So again, some deep in the weeds stuff, we get that nice expensive downside put skew. We take advantage of that. We use that expensive skew. This is very much a pro trade. You talk to any pro trader, these guys are doing these kinds of trades all the time.
Absolutely. So let's see how Eaton Corp did, ETN. So here's where you entered, and I see MTI is green here, Hans.
Stock goes down a little bit. Okay, not going to lose sleep, right? I've got this thing that's member. We've got that balance in there. We've got that balance. So we weight it down. It gets still above 310. We're good, right? And then we start to get the turn, right? So sometimes a story doesn't begin to show promise immediately. It often does when there's a solid MTI, but sometimes it takes a little bit of time. And that's the nice thing. If you're sitting on some upside calls, they are going to get compressed. They're going to get crushed a little bit. And here we go. That's the uptrend starting. We can see that solid green. We get those 3, 4, 5 days in a row. And that's exactly what we're looking for. And that's when we don't say, oh, I better get out now. No, that's when you start to let the stock dictate what's going on and the MTI dictate what's going on. And here you go. We're off to the races. Pulled out around 400, I think it was. Great trade. The stock moved about 5%, but again, we grabbed our 33% on, I think it was around 33, yep, on the income portion. And then on the other side, remember, we're financing that upside. We got 33% from the credit, which is pretty good. We're
Yeah.
not, there's nothing to be embarrassed about there, right? I talk to you guys about income trades, this foundational layer, like you're making 3%. No, these are potentially fantastic trades, usually better than the market's going to give you. But then we parlay that into the turbo upside, which gives us 109%. And that sure beats the heck out of that 5%.
Yes. And this is why this is how he puts together that growth. All right. You have the income trades. All right. You now have, and you have the leaps trade, his long-term view trades, but he uses MTI to time his entries and exits. And then you get these turbos when the setup is right, and they can be a big portion of your total trades, and they give you that fantastic upside at a rate that is much better than owning stocks because you're using options. Options give him the ability to control hundreds of shares for the cost of these individual companies of like 1 or 2 shares. And so when people are asking, how much money do I need to do this? Part of what we do here at Option Pit is to try and make this attainable to everybody, right? I don't need to make, Hans and I are not in the business of making rich people richer. If we were that, we would just stay at home and trade ourselves. We're in the business of helping everybody. And that is what I love about this approach. Anybody can do it. And it's got a consistency to it. And you're getting consistent foundational income from his income portion, more foundation from those leaps, and then you're getting that charge from his turbo trades, which is why we want to invite you to join Turbo Income and start your income journey with Hans. You're going to get the income, leap, and turbo trades, access to all 3 types of income trades for max performance of your portfolio. We give you trade alerts on every buy and sell, turbo, income, or leap, and they're sent to your email. They're sent via push notification. There are all kinds of ways, so you can be doing other things, and you'll get an alert on your phone. So you can be at Target or out to lunch with your spouse, or as we approach summer, you can be playing, doing something fun, playing mini golf with your kids. You get the alert to exit, and I can just pull up my phone app and do it. You're going to get logged into the Turbo Income portfolio. He averages about 1 to 2 trades a week. You're going to have more time to enter positions, and you can use turbos to turn what would be a 20 to 30% win into 200, 300, 500% gains. And you saw a couple of triple digits wins just now. You get weekly live trading sessions. This is where Hans says he's here to guide you, right? Many of you are thinking, well, I want that 48%, but how do I get going? Hans meets with you at the beginning of the week, every Monday at 1 p.m. Eastern time. He walks through his income strategies, new trades, any questions you have. He teaches, right? We are traders who teach here at Option Pit, and his goal in his sessions is to make you money and also make you a more informed and better trader than you currently are. You get the downside protection, the ripcord strategy. This is Hans has a clear safety net on all of your trade. It's easy to execute. The ripcord follows a single number. And if that number goes over 60 2 days in a row, you exit the trade. It turned, and because every strategy has its losses, but using the ripcord strategy, what would have been a 78% loss was a mere 17% loss. The ripcord corrects the number one missing piece in other income strategies, protecting your downside. There are strategies out there that are income strategies, but what they leave out is when things go awry, you lose everything you just made over the last year. Hans has corrected that. He has solved the greatest issue in income strategies using options with his ripcord. Turbo Income members also receive a 7-week course with Hans on Turbo Income, the Turbo Trade Watch List, full income video library, 3 different ways to scan for quality stocks, alternative income strategies, a free special report on historical versus implied volatility, and a free guide on IV rank and IV percentile, 2 of Hans' most important indicators. Bonus.
I love that, Mark. That is you get the Edge series. Sorry to interrupt, Mark. You get the Edge series, and this is something that members have said. It's mind blowing. They see stuff in there that they've never seen before. Because my whole world is about understanding sentiment and the overall picture, because that plays into everything. And so, really great feedback on some of the premium content. This isn't just, hey, show up once in a while. There is a full system that you can immerse yourself into to really feel like you're learning, understanding more, feeling empowered. And I think that's a great part of the program.
Absolutely. All right. Now we've got a bonus, the market temperature indicator. You can add MTI to your own charts so you can see upside momentum on every stock you trade. We have videos on how to add MTI to your charts in Thinkorswim or TradingView. You get unlimited access to see if your stocks have accumulated long-term momentum for a sustained move higher. You can use MTI on any market, not just income trades. You can use it on any stock you want. MTI is powerful, and Hans is going to give it to you for TradingView, which is free, or about 50% or more of you are using Thinkorswim. We can add it into your charts on Thinkorswim, and we've got the videos to teach you. This is a huge deal. And frankly, I'm kind of surprised you give this to people. This is your secret sauce, Hans.
What can I say? Secret no longer. Well, look, it may still be a secret, but you get to use it. And that's the amazing thing. You put in whatever ETF you want. You want to put in bonds. You want to put in gold. You want to put in anything you want to trade. The flavor of the week for you, you can put in here and really get that beautiful overview of how it's truly looking from the MTI. It's beautiful.
Yes. So we've got 3 membership options for you guys to join. And I want you guys to wait because I'm going to bring up something about Lifetime here in a second and why you should join the Lifetime. You can join 1 year for just $17.99, 3 years, $27.99, and Lifetime with an annual maintenance fee of $349. You can join for $34.99. And again, you're going to get the live trading session with Hans where he's going through the trades and teaching you. You're going to get the income, leap, and turbo trades, that entire income approach for you. You get the trade alerts, that ripcord strategy that is so important when you're income trading. You know, I mentioned that, you know, a lot, the flaw in every income strategy I've seen is that when things go sideways, the strategy blows up. Mike of Albion said, you know what, Mark, that's the truth. Hans has solved that with the ripcord. You're getting the market temperature indicator that you can add to your charts, the income video library, that turbo income full portfolio, the chat room, the ability to talk to other income traders. You get that special report on historical versus implied, and the special report education on IV rank and IV percentile. And again, you can join these for $17.99 for a year, $27.99 for 3 years, or the Lifetime for $34.99. Every purchase you have, 14 days you can refund, no questions asked. And now here's why I want you to join the Lifetime. We are working on an MTI AI engine. Hans is working. He's in the lab right now building this. It's an AI-powered automated MTI. It scans the entire market for highest momentum stocks. It filters by sector and score and more. And it identifies the best candidates for turbo trades. It's going to be ready to launch in a couple of months, and Lifetime gets first access. This is going to come with you are going to get access to this as a Lifetime member. You will get first access. The day we released it, you will get it as well. So this is something that is only going to be available to people that purchase the Lifetime. Yeah, it's incredibly cool. So once again, I want you to join Turbo Income and change the way you grow your wealth. Change the way you grow your retirement. And we talked about at the top of this presentation all the reasons to grow your wealth. All the reasons to grow your wealth. I want you to think about that for a second. And then think about how Hans is doubling the traditional 60-40 and how much more quickly you can grow your wealth and how much more wealth you can grow doubling the 60-40 portfolio over a 10-year period. And now ask yourself, right, given what the advantages are here and what my goals are, I need this. And the answer for many of you should be yes. It should be yes. And that Lifetime with the MTI scanner, you guys, when we launch that thing, the Turbo Income Lifetimers, they are going to go crazy on that thing. They're going to love it, Hans. I'm going to go crazy on it. I have my AI engine. I have Andrews open, and now I just can't wait for this. I'm going to be using this thing left and right. And if it's something that who has been trading professionally for 25 years at this point, am really looking forward to having. Imagine what it can do for someone that maybe only has a couple of years or is just getting started, or even if you have been at this for a decade, it will help you. It will improve your trading. And over time, I can't fathom how much extra cash I'm going to put in my own wallet using your MTI scanner.
It's exciting, Mark. I'm a little bit giddy over it. As you said, I'm in the lab. I'm working with the other lab technicians, the other crazy technicians, scientists, and it's going to be great. I mean, there's nothing better than a great tool, except for a great tool getting even better as it is here. And so I'm excited for everybody to join. It's exciting for me because this takes it to another level, right? I'm in there every week, and now we're going to have something else to talk about. And I want everybody to know that this is not hard, right? There's going to be a little bit of work. You're going to dedicate a little bit of time to spend with me, somebody who's done this for 3 decades and traded $1 billion in option strategies. I am there to make this easy for you, right? You're not going to be there figuring this out alone. So this is going to be really fun. We're going to figure out what to do. I'm going to lead you to the right kinds of trades. I'm going to show you where those opportunities are, how we structure them. We want income, when we want upside, when we want to protect ourselves. And so we're going to learn to put that money to work in a smarter way. And I think we talked about confidence earlier. That is a huge thing. You want to feel more secure about your future. You're going to know that every dollar you make is going back into your pocket and not some advisor who's on the golf course charging you to sit in the same old broken 60-40 portfolio. So this is exciting. You don't have to build the car. I spent decades doing it. Follow me, show you the road and all that stuff. And that's really the thing that's very gratifying, to see people doing great. And I invite you guys to join today. It's going to be fantastic. And we'll see you guys on Monday. We don't have to wait too long even. We'll see you on Monday.
Yeah, your first session is going to be Monday. So you want to join now. It's in 2 days. Hans, we got a couple of questions that I want to hit on. And I think we addressed this. Is there a minimum account size? Can't be like, you can't have $15 in there, but you designed this for just about anybody, correct?
For just about anybody, exactly. And that's the nice thing about these kinds of income trades that we do. And we showed you one earlier with ETN, and you can even adjust those strikes. There are ways to make this even more suitable for any kind of size portfolio. And if you have if you're lucky enough to have a $10 million portfolio, terrific. You can adjust the size for something like that as well. But this is very, very accessible. And don't let that hold you back.
All right. Question 2. And these were both in regards to the NVIDIA trade. And people were noticing that, there were times when between your entry and exit, there were times where the MTI went yellow or even went red for a day or two. What kept you in that trade? What keeps you in a trade when you've gotten in on green and then you see a yellow or even a red pop up on your leaps trade or a turbo?
Well, that's it. And so on that particular trade, I set that trailing stop on there. And sometimes I find that a green turning to a yellow can be an opportunity to add even more. I didn't there. But yeah, sometimes it is going to revert back to that sort of more incomey type layer, which is the yellow, which is okay. And then if I start to see 3, 4, 5 reds in a row, then it's time to react to something like that. But overall, it starts with a good story. The MTI tells you what to do. And then as the market evolves, there are different ways to react to that. But in that particular one, we stayed in.
So folks, if you were listening closely there, you just got a huge nugget of information there. Hans, once he's profitable on a trade and he sees it maybe flip yellow a little bit, but he still really likes the theme, he adds a trailing stop to the trade so that, if it does roll over, he gets out and holds on to some of that profit. That is not the ripcord, because people wanted to know, hey, is the ripcord the same thing as a trailing stop?
No, that's not the same thing. And the ripcord's beautiful because you have access to the tools that the ripcord uses on every platform. So it's a number when it happens a couple days, not even just in a row, even with something different in between, the ripcord. So you've got a number of different ways to approach this. And to the point about, in fact, it was NVIDIA. We know we had a recent breakout up to 215. And I had some trades that I added a stop to. I think we hit $16 and I added a trailing stop. Guess what? The next day, boom, we hit it. Got out of my trades, and NVIDIA's down $9 today. So initially NVIDIA rallied back and it looked like a poor stop out, and then it's collapsed since then. So these things can be great ways to kind of keep you on. Again, we're emotional, right? We're emotional. When I hit my profit target, that's when I set the stop. And I know I can't trust myself sometimes. And so I put that in, and it keeps me out of trouble, and it keeps me in a profitable trade, because there's nothing worse than being up a whole bunch of money and giving all of it up.
Absolutely. Utah Steve wants to know if there's a payment plan on the lifetime. The answer is absolutely yes. You could call my team 888-872-3301 or shoot him an email, support@optionpit.com. TTT says, hey, why don't you do a 1-month free trial? Well, we're not going to do that, but when you purchase, we have a 2-week, no questions asked refund policy. So you can purchase it and do it for 2 weeks, decide, hey, this isn't for me, and we will give you your money back without any questions. So you do get a kind of a 2-week trial once you join. And if you change your mind, we'll give you your money back. So there's no risk in purchase for the first couple of weeks. What time did this start? How much have I missed? You've missed almost the whole thing, J-Drop. Cancellation is usually a pain with most, but thank you. We're very easy. We're very easily. So canceling with us is we don't get a lot of cancels, folks. We have and Turbo Income in particular has what might be the lowest, if not the lowest, one of the lowest cancellation rates out of anything we run at Option Pit, which is already way below industry in terms of cancellations. But we do offer that 2-week trial, and it'll be hassle free. So don't worry about it. You skipped my question. Oh, is this kind of like a risk reversal? Kind of, but that's a great question for when you're in turbo income on Monday. I'll let Hans dig into that. Going through that process is going to be a bit of a that's a 10 minute conversation, but short answer, it's not dissimilar. Other questions for me? MTI is a combo indicator. What is the main momentum part based on? Hans, you don't have to reveal this if you don't want. But do you want to maybe give a hint? Well, we kind of told you when we were talking to MTI what's in there.
Yeah, we mentioned it. We mentioned a couple things. And one of the things that people don't realize, and we should have talked about, is that there is a component, because we're options traders, and because if you don't pay attention to sentiment and fear and greed and all that stuff in between, you're doing yourself a disservice. And so as market makers, I mean, I literally set prices for options for like a decade and traded against institutions, and I had to understand pricing and sentiment. And that is very much a part of the MTI. It has a component of sentiment in there that dials back your excitement when you should be dialing back the excitement, because as we all know, we can get caught up in the moment, and the MTI is really meant to push back against that.
Yeah. So folks, we're going to give you guys the bonus trade in 1 second, but I want to just tell you guys one more time, join that lifetime. And if you were here earlier, your gift that Hannah give you can use on that lifetime membership as well. You can do 3 years for $27.99 or 1 year for $17.99. To me, looking at this, the lifetime is an absolute no-brainer, especially knowing that we have this new MTI AI engine coming out. Rosie wants to know if this works for 401ks. Absolutely. I've got a SEP 401k and I trade these strategies in it. Yes, absolutely. It works for a 401k. This is great for retirement accounts. This is actually a wonderful strategy for retirement accounts. So again, click the link to join us or give us a call, 888-872-3301. 888-872-3301. All right. So Hans, let's give people that turbo trade, that little bonus trade, and have at it. So what do you got?
All right. Well, look, if you guys watched the show this morning with Andrew, the state of the market, which you shouldn't miss ever, I talked about how my whole short Meta and Microsoft, long Amazon, Google, and what was the other one? Long Google, Amazon, and why can't I remember the mag right now? Apple. Not Crapple. Apple. Apple's actually acting like Apple today, not Crapple. I love those names, and Google's had a hell of a run today. I'm not going to jump in there just yet. I'd like to see that recycle back a little bit. But Amazon, beautiful AWS growth, really in the heart of what's going on out there in terms of infinite compute demands and all that stuff. So I'd like to do something on Amazon today, which is, and we talked about this yesterday, Mark, so sometimes one of the best trades you can do is play for that continued compression after earnings come out in a trade that is acting well, that is showing stability. And so that's where I would position in a June put spread. And we're going to look for the kind of delta that I like to look for, which is going to be selling the June 18th, 245, 235 put spread. I like Amazon. These big names have those nice spreads, that really nice liquidity that we look for, which is always important. And I think you can grab, let's see what we can get for that.
About $2.
We're literally doing this. We're doing this in real time, guys. This isn't.
Yeah.
We do that. I think if you can get $2 for that, I think you're doing really well. I see a stock that has broken out. I see a stock that is consistent yellows on the MTI, which is good. Not yet. If I saw MTI green there, I might be more inclined to strap on a turbo. Right now, I'm happy to make that an income trade, which is fine. And I'm going to look to get $2 selling the June 245, 235 put spread.
All right.
For that income trade. And
folks,
with the MTI,
that is the, and I'm just going to post this in chat here. It's the Amazon June 18th, 2026, 245, 235 put spread. Oh, whoops, didn't mean to call it the calculator. Selling the 245 put to buy the 235 put, collecting $2 or more. And there is your public post. There we go.
Now my target on that, when we get filled, is going to be, and I actually have a framework that you'll learn for where you monetize trades like this. My target for that is going to be a capture of $1.30. So once you capture that $1.30 of premium, you've received $2 for it. Once you've captured that $1.30, you can set an alert in your system to tell you when that happens, when it's marked to that level, right? When the market says, okay, that's roughly where it's going to, that's where it's going to close. Now, I may adjust that capture because as a stock sentiment changes, I can adjust it either up or down. I may take less, but in all likelihood, I'll probably wait to grab a little bit more there. So that's our target, $1.30 capture.
Yeah. So if I got $2, I'd be looking to buy it back for 70 cents. Exactly. It's that simple. And you could even put in a buy for 70 cents, good till canceled, and forget about the trade. Just making sure you monitor it every day. And again, we're not going to be managing this for you. You are doing this. If you decide that you like this, you do so at your own risk. But you know, I like the risk reward here. And, you know, I think everybody should like the opportunity to join Turbo Income. And again, if you join Lifetime, when we launch the MTI AI engine, you will get access to that. Do we have any other questions on a put spread? Do you need the cash to cover your account, to cover the sale part? Yes. So the cash on this is going to be, you're going to need to put up $800. So it returns 25%. These are all lessons that you're going to learn in Turbo Income. Hans is going to guide you through all the questions you have about how to manage this trade. So if you're looking at how this looks and you're liking the idea and you're going, well, how do I manage that? Hans is your guy and he'll be with you on Monday to answer those questions. So once again, click the link or give us a call, 888-872-3301. Email us support@optionpit.com. Do you need level 3 for this? Spreads are usually level 2, but it really depends on your broker, B. Davis. William says, Hans is an awesome teacher. I concur. That is why he's here. Thank you.
Thank you, William.
You are,
and thank you, Mark.
Teacher, Hans, and you're a wonderful human being as well.
Well, the jury's out on that one. But
I don't see any other questions. So, folks, I want you to, again, give us a call or shoot us an email, support@optionpit.com, and we'll be glad to help you out. Click the link that they dropped in the chat. Click the link that is above our head on the on your computer screen that says Join Turbo Income today, and take advantage of that lifetime offer to get access to MTI. And again, you are going to be every purchase 2 weeks, no questions asked. So there's zero risk for joining. All right, everybody. For Hans Albrecht, our head of income trading, I am Mark Sebastian. I am your only option. Thank you for being here, and I hope you have a wonderful rest of your day and a great week. Have a good one, everybody.
Thanks, everyone.